Pretty much everything is getting more expensive right now, from going to the grocery store to taking out a loan from the bank. And really, other than some investment products like stocks and crypto, for example, there's not much you can get a great deal on right now. But interestingly, some of these very products can actually help you with some income to help with those short-term costs. Today, we're going to talk about passive income and 6 ways to earn it through investing. Before we get started, I want to note that I'm not a financial advisor, and this is not personalized advice. So what do we mean when we talk about passive income? Passive income is basically any kind of income you can earn without doing work on a daily basis. Now, there's not like a really thick definitional line here. Everything requires some work, right? Otherwise, it would just be free money, and if I knew how to get that, I'd tell you right away. Passive income, when you're talking about it from an investing standpoint, is putting money and potentially some work into something in the hopes that that will kick off regular payments to you that will help you, maybe in this case, offset some of the rising costs you're facing through inflation. The first form of passive income I want to talk to you about today is real estate investing. Real estate investing is probably one of the more common forms of passive income that you might have heard about. It's pretty simple. You own some property, you charge someone to use it, and the rent payments are your income. Now, anyone who's been a landlord can tell you that it's not always very passive. You have to find tenants. You may have to pay someone to do that for you. You have to do repairs or pay someone to do that for you. But if everything's running smoothly, the rent comes in and you receive it as passive income. Now, another form of passive income real estate investing is investing in real estate companies or companies that own real estate, such as real estate investment trusts. Essentially, you just put some money into a real estate investment trust, and over time it will pay out dividends or give some of its profits back to the people who have given the money to invest. Usually these work in commercial real estate. So speaking of dividends, there are lots of different kinds of stocks that can pay out dividends. So let's talk about dividend stocks generally. Basically, any company that's sharing some of its profits with its stockholders is paying out a dividend. And there are many options when you're looking at this. Most of the blue chip stocks in the US will pay out some form of dividend. Usually these payments come at some regular interval, maybe quarterly, yearly, etc. Essentially, with a dividend stock, you're picking a company that you believe will continue to, give you some regular income from your investment. If you don't want to pick specific stocks, however, there are also like ETFs and other kinds of funds that are focused on dividend stocks, so you can consider those as well. Similar to stocks, cryptocurrencies can pay out passive income. Cryptocurrencies basically do this in several ways, but one of the most common is called staking. Essentially, that involves committing or putting up some of your cryptocurrency at stake in order to vouch for the accuracy of transactions on an underlying blockchain network. If it sounds complicated, it kind of is. You want to make sure that you really understand it. We do have a whole video on that if you want to check it out. But broadly speaking, cryptocurrency staking can give you a small amount of passive income without having to sell your cryptocurrency. We've talked about buying things that can produce passive income. Now let's talk about lending money to produce passive income. One really common way to do that is through a bond. A bond can be issued by a lot of different kinds of organizations, but the two major ones are governments and companies. Essentially, they're ways for companies and governments to borrow money and make a promise to pay them back. Essentially, you get a payment of principal and interest at various intervals as agreed upon in the bond. Now, bonds can also be traded. They can grow in value or shrink in value to trade on the market as people's ideas about the likelihood of full repayment change. But generally speaking, if a bond is working well and it's doing what it's supposed to do, you will receive payments pretty regularly and pretty predictably. Another way you can earn money through lending is through peer-to-peer lending. Now, peer-to-peer lending can be a little riskier than giving money to a bank and getting a defined interest rate, but it also could have higher rewards. Sometimes they pay up to 5%. Now, basically what you're doing is connecting with the service. There are online services such as Prosper or Lending Club, and there are ways to sort of connect to people who really want to borrow money. Individuals may have their own circumstances that make their repayment more or less likely, which adds to the higher risk, but you can balance those risk and rewards. Now, if you have a little more money to throw around and you're interested in investing in something in your community, you can also consider what is called private equity. Private equity is basically what you've heard about on Wall Street, buying shares in private companies rather than public ones. Now, yeah, that can look like big buyouts, Wall Street stuff, but in the end, it can also be as simple as investing in a relative who wants to start a business. If you believe that business has potential, you could potentially be a part owner of it and get some of its profits. We've all heard of people whose nephews and nieces have come to them with business ideas before they became wildly successful. But a lot of times people do help each other out starting businesses, and it can work out well for both people and provide a stream of passive income. We've talked about a lot of different ways to earn passive income through investing. And again, I think what we've shown here is that no form of passive income is really passive. You have to make decisions, you have to do work, and you have to check in on your investments to make sure that they're actually paying off the way you hope, and that they're continuing to rise in value and perform other fundamentals that you need for your portfolio. Anyone who tells you it's easy to get money is probably trying to sell you something that's not sustainable. So you're going to have to do the work. If you build a house, you can rent it out, but building a house is a lot of work, right? It involves a lot of investment. So you just kind of have to think about what kind of upfront work you're going to have to do, whether physical, mental, in terms of research, in terms of putting money in, and whether you have that resource available to give. And that's what you're getting paid for when you invest in something that throws off passive income. I'm Andy Rosen, an investing writer for NerdWallet. I know we talked about dividends a little bit, but if you are interested in learning more about how dividend stocks work and how they compare to other stocks, we just did a whole video about that you can check out. If you learned something in this video, please like and subscribe.